In this video, I'll be explaining my fair value price for Lemonade for the end of 2021 so you can know whether you should be buying, selling, or holding Lemonade in your portfolio. Hey guys, I'm the Paperback Investor, and my channel is all about helping you find the next multi-bagger investment for your portfolio. I'm an investor focused on long-term, high-growth investments, and I've been investing since about 2008, 2009, around then, and have been able to return approximately a 30% compound annual growth rate over that time. I don't say that rate to brag, but really to open your eyes to what's possible in the investing world. So if that all interests you, make sure you hit that subscribe button and smash the like button while you're at it. So I put together 3 possible scenarios for us to consider today: a bullish scenario, a bearish scenario, and a more, what I'm calling the more realish scenario. Note the relish. Got to slide in a dad joke or two once in a while. So bullish, bearish, and realish. Really, bearish is really not it's still looking in a very positive way at Lemonade, which I feel, is how I view the company, but is less enthusiastic than the bearish scenario. But we're going to walk through each one of these just briefly, and then kind of get to the bottom numbers and compare those for you guys. So this is a spreadsheet called Lemonade 5-Year Projected Value, where I'm projecting out the value 5 years from now, and I've showcased this in other videos. I will put a link for this spreadsheet, this specific version of it, May 26th, and with these 3 scenarios in it down below in the description of the video, so feel free to check that out. But it starts with gross earned premium for Lemonade. You project that out. It has a few years of history and then projects that out, and then it also sort of shows a reinsurance side and a if there was no reinsurance sort of side in the scenario. It kind of does show some of the math of roughly pretty close, or quite close to what how their reinsurance is currently structured, meaning that 56% of the gross earned premium goes to reinsurers, 44% to Lemonade. So in this version, the very bullish version, you can see my gross earned premium up till, this is kind of year inclusive. So this year is what Lemonade is projecting themselves, their guidance, and then projecting out to 2025, having about $2.9 billion in gross earned premium in about 4 or 5 years from now. And this, I'm projecting, they're going to continue to grow at about an 80% rate, continue to add new products, more sort of higher value, bigger ticket products such as auto insurance that is coming in the pipeline, and then also expand geographically, which is, I think, kind of Lemonade almost, it's like they started in the US, they expanded their customer base quite aggressively, reached 1 million customers, and now it's like it's like they kind of, with that 1 million customers, they're sort of building the foundation of the system, making sure that all worked. Now it's like they're building out all the different products that your average customer might need, most of the main big ticket products, and then especially that helps kind of cross pollinate, because same customers are going to buy more than one product, or might only go there if they have all the products they need from Lemonade, right? So I think they're kind of doing that, and then I think they're going to geographically expand. We'll see in the next few years. So this is quite reasonable, I think, 80% growth, and this could just keep growing as they go to more and more countries and more people in those countries accept their products. But anyways, so this is the bearish scenario. You're getting close to almost at $3 billion in gross earned premium by then. Insurance losses, I've set at 70%, which is kind of their target. I know it's kind of an industry average. And again, this is sort of shows the reinsurance side over here, which is what they are using. So 75% is covered by reinsurance and the remainder by Lemonade. And then operating costs, I've just extrapolated that out at 22% growth per year, so you get to almost 400 million there. You do your math to subtract those, your operating income with reinsurance, you're looking at in 2025, that full year, 370 million. And I'm assuming 20%, 1% goes to tax, so you get left with 292 million. In the bullish scenario, I'm giving a really big PE ratio of 100, so I'm saying, they have 100 here, and the market cap with reinsurance then is about $29 billion by 2025, the end of 2025. So I guess the way I'm calculating 2021, the end of this year, is first calculating 2025, what that number could look like, what could be the market cap potentially, and then extrapolating that back at a discounted rate back to the end of 2021, end of this year. So that's kind of the key number there. If you're not familiar with this, the future and present value formula, kind of the foundation of the value of money over time. But it's basically saying the future value, the future is equal to the present value times by 1 plus some interest rate, and that's to the power of a certain number of interest rate multiples. So we're looking at interest rate on a yearly basis and n number of multiples. And so you rearrange this equation because we actually want to solve for P what the present value is today or at the end of 2021. So we get P is equal to F divided by 1 plus the interest rate all to the power of n. And your F here is going to be your 29,000 just from up here, or not $29 billion in their market cap. Your N is going to be 4 years. You could go back from the end of 2025 back to the end of 2021 is 4 years. And I'm using 15% rate because I'm really thinking, essentially what I'm saying is the price we're going to arrive at here, in theory, that price today could still kind of grow at 15% a year and grow into this market cap. Okay, so the market cap fair present value, which is basically this P value, if you solve for these values in here, gets you about $16 billion. In this very bullish scenario, it's saying a Lemonade by the end of this year should be worth $16.7 billion. Up for debate because this bearish bullish scenario some people might say is too bullish. But 16.7 billion, and then you take the market cap today, you take the share price today, and you multiply those out, you get a value today of $272 would be roughly what Lemonade is worth right now. So that's your bullish scenario. Again, some people you could definitely argue some of the numbers in there, might say it's too optimistic. But now we're going to look at the bearish scenario, just sort of not all the details, but again, just flip through it. Instead of it was closer to 3 billion, you extrapolate out at a lower projected rate, you get to maybe 2.5 billion, and then the biggest other thing I changed here was the PE ratio. Now I put a 60 PE, which is still a very high PE ratio, but maybe you could argue, to me that's still possibly realistic even in the bearish case, because they really have global ambitions to be like a generational global company that really is like the insurer of the future. So to me, they're only in this case, they're going to be $2.5 billion of gross earned premium is just a drop in the bucket of really where they're headed. So this growth rate could just keep turning and keep going. So and again, do all the same math, you get a $12.2 billion market cap in 2025 with reinsurance. You do the same math, you get back to the present value today is like $114. So it goes from $84 now to the end of the year. They're suggesting it's gonna be between like 114 all the way up to 270 something would be the fair value. Obviously a really huge range. That's why I also did the real-ish tab, which we'll talk about now. And I want to mention, if you're getting value out of this video, I encourage you hit that subscribe button, hit that thumbs up while you're at it as well. Really appreciate that, and you'll have more Lemonade content from me in the future. I really love this company, so make sure you hit that button down below if you're getting value out of this. Okay, the real-ish tab. So again, I changed some of these projections to get about $2.4 billion instead of that really bullish was closer to 3, so 2.4 billion-ish again projected value, but the main operating costs I still projected the same. Main thing I changed here though was the PE ratio. Instead of 60, instead of 100, I did an 80, so kind of middle of the road, somewhere in there, and that gets you about 2025, that $15.3 billion market cap. And you do the math again, you punch that in with today's values, it'll get you a fair price of approximately $142 by the end of this year. So that's kind of our range. The most bearish, the very highest is 272, or the most bullish, sorry, 272, the lower price 114, and the kind of realistic might be more around the $140 some per share by the end of this year. So let me know what you guys thought of these numbers down below in the comments. If you have any questions or ideas for future videos on Lemonade or other companies you'd like to see me research, please let me know in the comments down below. I can't always respond to all your comments, but I read all your comments. And thank you for your time and watching this video. Really means a lot to me. And remember, it's in the bag.